This is Karl talking management for the Globe and Mail. Today I'm delighted to speak to the editor-in-chief of The Economist, John Micklethwait. Good morning, John.
Good morning.
Welcome to Montreal.
Well, it's great to be back here.
John, one of the things we're looking at now is that what form will the recovery take? People have talked about it being perhaps a V, a W, or an L. What's your view of what shape the recovery will take?
I'm a fan of the U-shaped recovery.
Okay.
I don't think it's near the conditions are nearly there to really have a V-shaped one. I just think there is so much stuff. There is so many debts, particularly on things like the American consumer. I can't see the real kind of rapid takeoff. Those people who want a V where it comes straight back up again. I can't see that. On the other hand, I think the governments on the whole have done most of the right things, somewhat clumsily, sometimes in the wrong way. And that as long as they don't retreat from those things too quickly, we should be able to avoid a W, i.e. where it goes down again. But I just think basically whenever you have a banking crisis of this sort of level, you just don't see a really rapid recovery. You might see a little bit in the next couple of quarters because people will suddenly spend a little bit more money. But in long term, people, I think, are going to focus much more on saving. I don't see the American consumer, as I said, being that engine. I think emerging markets are doing fantastically, but I don't see them really replacing the American consumer as a driver of the way the world's going. So the good news is we're not in the Depression. We're not even, I think, in the sort of Japan in the 1990s. We're not heading towards a lost decade, but we're heading towards a sort of rather dull, stodgy period, I think, over the next few years.
When you think about it, the role of government has dramatically changed in the last couple of years.
Yeah.
3 years ago, you would have said, well, President Bush would do this, that Merkel would do this. We'd say, no way. So government's suddenly more important than it was even 2 or 3 years ago. And certainly the view of The Economist is one that would say markets should reign above, well, maybe not above all, but should simply reign. What is your view of the role of government these days in the economy?
Well, I have two reactions to that. The first is that, I mean, my main reaction is I think economic liberals have had an unjustly tough time on it. Because I think that if you look at the period, you talked about 3 years ago, 2006, well, back then, yes, it's true, there was a greater presumption, I think, in favour of deregulation, a greater presumption in favour of opening up, greater presumption in favour of globalisation, something we've both written about. And that had the most amazing effect on the world economy over the previous 25 years. But, and I think this is a big but, is throughout that previous 25 years, governments kept on growing. It wasn't like governments retreated ever. Governments have always been there. What's changed, I think, is that sort of presumption, that idea that used to be that the market was always the solution and that government wasn't. There now seems to be a turn on that. And actually, I think on the whole, it's one which is not wholly justified by what's actually happened.
So you maintain the Economist's traditional view of markets being a central actor. You haven't pushed back on that.
No, I think there's two. I think there's two bits. One is there a big problem in finance? Answer: there is. Not even the most crazed libertarian. Well, okay, a few crazed libertarians are going to stand in front of you and say it was fine to have $65 trillion worth of credit default swaps. It wasn't. You know, finance got into a mess. But what I think what's the big danger at the moment is the idea of a particular set of problems to do with finance, which has always been different. You know, economic liberals, Walter Bagehot, my most famous predecessor, 100 years ago was writing the rules about what you did to step in to help banks, because economic liberals have always understood that manias and panics and crashes are part of the system. That's always been part of it. But the real thing at the moment is to prevent that big problem in finance pushing through to the rest of the economy, the rest of the world economy. Because you have had that amazing change over 25 years. You know, when people look back over the past 25 years, when historians come to do it, when people like yourself come to write about that period, they are not going to write about Goldman Sachs. They're not going to write about AIG. They're not going to write about Wall Street bonuses. They're going to say that was a period when 1 billion people got dragged out of poverty in probably the biggest economic transformation of all time. That is the big thing that happened. And that's the thing which we should try at all possible costs to defend. And actually, so far in the emerging world, it seems to be holding up quite well.
One of the things my students talk about, and again, we've been doing this in the business schools, moving from a shareholder model to a stakeholder model, which is a continental European approach. Do you see that the US and the UK going in that direction as well?
I do. I think what's interesting at the moment is that when I look around the world, a year ago when this all began to go wrong, I was deeply worried by the future of quote-unquote economic liberalism. And what strikes me, actually, the emerging world have hung on to it fine. China's kept on doing the same things. India's kept on opening up things because that's places where people can see immediately the tangible benefits of having more mobile phones, of having cars, of having all the things which has enriched the world. Quite interestingly, in the old European bits, Sarkozy, Merkel, I sort of expected there to be a big swing to the left. That hasn't happened really. Merkel's just re-won, or not just won, she's won a much bigger victory in Germany than I ever anticipated. Sarkozy and Merkel have both, employed quite a lot of leftish rhetoric, but Sarkozy's still deregulating. He's still trying to push ahead on most of the things. And the place where I think economic liberalism is in a form of crisis, obviously I think wrongly, but as a journalist I have to report it,
yes.
I think is in its old Anglo-Saxon strongholds. It's in America, it's in Britain where you begin to see the biggest attacks, or I think the biggest changes. And that's partly just to do with the fact, as you said earlier, of the state grabbing a bigger share of the economy. The state and its debt are going to account for more than they did before. But I think it's also to do with that underlying presumption, because the reason why the world jumped ahead was that there was a general presumption that, okay, yes, governments were growing and so on, but the answer to most problems was to look for a kind of market solution to them. Maybe not go for it completely, but that was the first thing to do. Now I think that presumption has been reversed. I mean, if you went, even a man as wonderful as you was to be made President of America, to actually say, look, the answer to education is to deregulate, immediately that conjures up images of Wall Street. The same inherent presumption, I think, in favour of entrepreneurs has switched a little bit towards, bash the rich and stuff like that. I think there is a sort of sea change there. How big it is and how permanent, I don't know, but there's certainly a big sort of question mark over what one used to see of some of the main points of Anglo-Saxon capitalism.
But it would seem like the Economist, holding its traditional line, would say that this is something that we hope goes away and then we come to our senses over time.
Yes, but again, we've always been, we're reporters as well as idealists,
Yes.
and the reporters, and we look at the evidence. The evidence is what tends to happen in financial crises is that the state, after them, expands, it comes in, and then usually it gets pushed back a bit, but it never gets pushed back further than where it was before.
Okay.
So as a reporter, I think that's likely to happen. From an ideological point of view, yes, because I think fundamentally the state, look at the epicenter of the current mess. The epicenter of the current mess was the American mortgage market, possibly the most regulated market on earth. It has its own 2 federal agencies, its own supervisors, had rules precisely about who was allowed to lend to whoever on what basis. And that was on the back also of a huge amount of state-directed excess saving for the emerging world. Well, if those were the 2 main ingredients of the big bust which came along, those were both things which involved the state rather than untrammeled markets. So I'm not saying that finance doesn't need reform. There's lots of areas where we've got to sort of, in some ways now, I think, push banks back out into the private sector. The biggest problem with finance to me at the moment is the idea that banks are now massively reliant on the state. We need that in the short term. We need to support them. But in the long term, we've got to get rid of the explicit guarantees. We've got to get rid of the $2.7 trillion worth of things we've said. And we've also got rid of this implicit assumption that when a bank goes down, the state is going to come in. Because that is, I think, the root of all the other problems. It's the root of the return of big bonuses. It's the root of the idea that it's too big to fail. Heads I win, tails you lose, the nature of finance. All those things go if it is possible for a bank to be able to if it makes mistakes, firstly, as shareholders to bear most of the cost through more capital, but secondly also for there to be things like living wills and the ability of the state to say no, you carry on. That's a problem. You've lost all your money, but it's not a problem for the rest of us. And it's that problem of systemic risk, which we're never going to get rid of. But I think we can begin to move to push down.